Everybody, thank you so much for attending our VA home loan and housing seminar. We're going to get started in about 2 minutes, and we're just going to wait for folks to trickle in. So hang tight, and again, we're going to be starting in 2 minutes. Hey, what's up, guys? Thank you so much for coming in and attending our online webinar. My name is David Piatek, and today we're going to be going through various aspects of the VA home loan. Even if you guys are looking to use it now or sometime in the future, or if you guys know other people that are interested in using their benefits, we're going to be talking about all the various topics that surround it. So I just want to at least take you guys off the screen, introduce myself so you have some face with the voice. So we'll get started now. So just give me 1 second. Put you guys back up on this. So just a couple housekeeping items. If you guys have questions on any part of the stuff that we're talking about, please put it in the chat. That way, as I go through this or finish a PowerPoint slide, I'll be able to answer all the questions you guys have. If there's things that are not answered in this PowerPoint, which I feel like 95% of the questions you guys might have are going to be answered today. But you guys can always reach out to me via, I'm going to have my cell phone number and my email address at the end of this presentation. To give you guys a little background about myself, I'm a vice president at the Federal Savings Bank, where I specialize in helping military members across the country to use the VA home loan. I'm also an instructor for the National Association of Realtors, where I teach the Military Relocation Professional Certification. Also helped revamp that program earlier this year, where I teach realtors on how to work with military members. Also an accredited buyer representative instructor for realtors and a condo instructor. And also a pre-licensed and post-licensed real estate instructor. So I teach realtors how to get their licenses and keep them. I'm also a writer for Military Times and currently serving in the Army National Guard. And Latoya, to your question, will this be recorded? Yes, it will. And we'll be sending that recording out later on, either tomorrow or today or tomorrow. So when we look at using the VA home loan, there's a lot of misunderstanding of the VA home loan. And the reason why is you probably go online and you search a question, and then you'll see multiple different answers. And there's a reason behind that, because a lot of times lenders will talk to the products that they offer. Today's a little bit different. We're going to be talking about how the VA home loan works from the VA side. Now, a lot of this stuff, we do offer that. But again, this is really to educate you guys on the different aspects of it and just lay down some truth so you guys know what you guys want to do. Now, this seminar could easily go for hours. right? So the basic seminar that I teach is 8 hours alone. So please put in the chat box what you guys want to learn today in this seminar, because again, this is your time that you're spending with me, and I could talk about a lot of different subjects within the VA home loan. Now, I'll be touching on a lot of them as we go throughout the webinar. And one of the questions we had is which vets qualify. So that'll be answered throughout the webinar. We're going to go through credit. We're going to talk about income, and I guess so. To K-Wright, do all vets qualify? So it just depends on the type of discharge you have, which we'll be talking about a little bit later. Another question that came about is how do I start the VA home loan process? So that's going to be that process I'll kind of talk about now because that is not included in this webinar. To start the VA home loan process, you need to reach out to a lender in order to determine your eligibility and qualifications for the VA home loan. That way you have a good parameter of what you can actually purchase. Because a lot of times people will talk about, I've been pre-approved for an X dollar amount, but that is really not the case. You're pre-approved for a mortgage payment. And as you guys know, you want to control your budget. So if your budget is $1,500 a month, that could be a $100,000 property, or it could be a $300,000 property. Just really depends on the type of property that you're buying. Okay, we have some questions about people want to learn what is actually needed to receive the VA home loan and actually use the VA home loan benefit. That is a great question. And that will be something that we definitely be covering. And one question that's come up in prior webinars and seminars that I've done is people ask, is the VA home loan really beneficial to use? So it was an interesting question because normally people haven't asked that, and that just started coming up last year. Just because veterans do get pushed away from their VA home loan products, like into conventional loans or FHA loans, but there could be a reason behind it, which we'll find out a little bit later. So the agenda, we're going to be talking about the VA home loan myths. We're going to be talking about the benefits of the VA home loan. We're going to compare the different loan products that are available. What does a conventional FHA or VA home loan look like? We're going to talk about eligibility requirements. We're going to be talking about qualifying. So I'm going to go through various income, employment types. We're going to talk about eligibility, when you can use the VA home loan, how long have you needed to serve. We're going to be talking about closing costs. We're going to talk about what does that process look like. And then we'll wrap it up with just understanding with any questions you guys might have and just look at some loan comparisons between renting and buying. So some of the VA home loan myths that we still come across today is how many times can you use the VA home loan? The answer to that question, it's unlimited and it's a life benefit. So sometimes, we still hear this a lot, is veterans will say that they're using or saving their VA home loan. You don't have to save it. You can use the VA home loan and you're still able to have multiple VA home loans at the same time. So that was kind of to my next point, is you can have two VA home loans at the same time with no down payment as long as you have enough entitlement. Now, this isn't a math class, and it will take me about 30 minutes to an hour just to explain the breakdown of how that entitlement works. But just so you know, if you don't have an outstanding VA home loan, there is no limit on the loan as long as you qualify with no down payment. So if you want to buy a $600,000 home, or let's say if you want to buy a 4-unit building at $600,000, you're able to do that with your VA home loan. Other loan products, you wouldn't be able to do that. You would have to put a pretty substantial down payment, but that is just recently changed. But when you have two VA home loans, it's based on the old rules. So We'll go over that a little bit later as well. Another big question that I get a lot is you have to live in your home for a minimum of 1 year before you could rent it. That is definitely not the case. You do not need to live in your property for a minimum of 1 year before you could rent out your VA home loan. And the reason why is for like myself, serving in the National Guard, I could buy a home today and be deployed at any time, and then I would have to, it would be undue hardship on myself if I wouldn't be able to rent it out. That's why there's really no cap to that. Who offers VA home loans? It's lenders. It's not going to be the VA unless it comes to the specially adapted housing grants. Those loans are administered by the VA. But other than that, it's going to be lenders like myself or other folks that offer those loan products. A lot of times people will say, oh, I got approved by the VA for a home loan. That is definitely not the case. You will, again, always be pre-approved and get a loan from a bank or a broker. Can you buy an income property with the VA home loan? The answer to that is yes, you can. And in Chicago, you can buy up to a 4-unit building. So for a lot of folks, over like the last year, since we've been doing these webinars, people have been able to buy 4-unit buildings and actually make money on their mortgage. So their mortgage is covered by the rental income, and they're able to actually live in that property and make money. And another thing is can you use the VA home loan for a construction loan? I know it's also one of the questions that pop up. Yes, you can, up to 100% financing. So that includes land acquisition and the build out of the property. And I'm just give me 1 second here. We have a couple questions. So the question that we have on here is, can you use the VA home loan to do a renovation loan to make improvements? There's 2 ways to do that. One of the ways is to do a cash out refinance on your VA home loan, where you can go up to 100% of the value to pull money out and make improvements. The other type of loan you can do is a renovation loan that lenders offer on the VA home loan. But a lot of folks, at least the folks that I've come across, like doing the work themselves, because if they pay a third-party contractor, about 25 to 30% of that cost is just in commission to a person that's offering the services, and then you're paying a substantial amount of money in labor. So if you don't want to do the work yourself, a renovation loan is great. Or if you want to do the work yourself, you might be considering doing a cash out refinance to do that. I had a question here is, can you use the VA home loan? Can you use a second VA loan to buy an income producing property like a 4-unit? Now, I did mention that you can buy a 4-unit property with the VA home loan, but if you're trying to buy an investment property, you're not able to do that with the VA home loan for the pure purposes of an investment property where you're not going to be living in it. If you have a VA home loan in Chicago and you're as a single family home, let's say, and you're wanting to buy a 4-unit building, that would be a hard justification from the VA side in order for us to be able to give you a loan. Another thing that you can do with the VA home loan is you can refinance out of a VA home loan into a conventional or an FHA loan, and vice versa. If you have a conventional loan or an FHA loan, you can refinance it into a VA home loan. So you can toggle the loans in between each other. There's really no time limit on there. And one thing I do not cover in this webinar is the interest rate reduction refinance loans. I do have a separate webinar that I did the other week, which we can share with you guys along with the VA, along with this seminar. So then you guys could understand what the interest rate reduction refinance loan looks like. There is time limits on that, but again, we'll go over that in a little bit. Benefits of using the VA home loan. Typically, you're going to see that interest rates are lower on VA home loans. Now, they seem much lower, but you really have to be careful because a lot of times there's huge fees associated with the VA home loan that veterans don't necessarily understand or understand on how to read them. So towards the end, when we go over closing costs, I'm going to give you a breakdown of where to see these closing costs and where they're located. If you received, even if you had if you have a current VA home loan, you'll be able to pull up that loan document and you'll be able to see some of the fees that are being charged. There's little to no down payment requirement nowadays with the new VA home loan not having a limit on there. As long as you have a freed up VA home loan, you don't have to put any down payment, but you might want to consider it if you do have the money. 1, 2. If there's a what's called a VA funding fee. So there's a fee to use the VA loan that the VA charges. It's the only fee that can be rolled into a mortgage. All other closing costs when buying a home must be paid for out of pocket or a seller credit. And again, you have to really think about, does it make sense to do a down payment or not, especially with today where rates are an all-time low. And I'll show you guys what they look like in the next slide. You don't have any private mortgage insurance when you're doing a VA home loan outside of the upfront VA funding fee, right? That's the only fee that gets rolled in. But on a monthly basis, you do not have to have private mortgage insurance. Qualifying standards are a little bit looser on the VA home loan. So typically they'll allow down to like 580 credit score. But with the recent events, as in COVID, those standards have increased across the board for a majority of lenders. Typically now they're looking around 640 with the credit score. You're still able to go down to 620, but 640 is what they're really looking. If you have a service-connected disability, your VA funding fee is waived. Even if it's 10% or higher is typically what we want to see. I've definitely seen people with 0 disability ratings get the VA funding fee waived, but that's more of when you're just being discharged from the military. You get assigned a rating, but you never follow through to get a monthly check. I don't know why people don't like free money, but I'll take it happily. So again, if you collect a service-connected disability of 10% or more, the VA funding fee is waived. And in Illinois, if you collect 70% or more in disability, your property taxes are also completely waived. So no property taxes at all. So, but if you collect less than that, there's a whole chart. I know that Chicago veterans did a event or did a webinar with Lourdes. They could probably link that same webinar to you guys so you can see exactly how those property breaks work and how the breakdown happens. So now we're going to be talking about the side-by-side comparison of conventional FHA and VA home loans. Now on this one, I said, which one would you choose? But I think you guys are going to see what the obvious answer to this is. But just keep with me when I go through the various side-by-side comparisons, because sometimes it might not make sense to use a VA home loan, especially later when we talk about condominiums, because not all condos qualify for VA financing. And I'll explain that later as well. So when we're looking from the top left to the right, you'll see that there's conventional loans, FHA loans, and VA loans. Typically for a conventional loan, you'll be required to do a 15% down payment. Now, they do offer them as low as 3%. FHA loans, 3.5%. And a VA home loan, in this case, is going to be 0%. If we look at the loan amount, it's straight math for a conventional loan. FHA loans charge an upfront mortgage insurance premium, kind of like a VA funding fee that gets rolled into the mortgage. And in this case, when you look at the VA loan, you'll see that the loan amount is greater than the purchase price because this veteran is using the VA home loan for the first time and the VA funding fee is 2.4%, and that fee is $7,200 on a $300,000 loan. That's how it gets wrapped up. Now, when we look at the mortgage payment and interest rate, so conventional rates right now are 3.25%. FHA and VA rates are at 2.75. It is nearly free money that is out there. So one, if you have a VA home loan, even if it's an investment property or a second home, you would still be able to qualify for these rates and refinance them. Again, even if a VA loan is an investment property, you still can do one of those interest rate reduction refinance loans. So when we look at the private mortgage insurance, because taxes and insurance stayed constant, you'll see that the VA home loan with no money down is still $147 cheaper. One of the questions that we had was talking about if you have a service-connected disability and a full-time job, would you need a cosigner? So the webinar is really designed to give you an overview that kind of fits everyone's bucket. Now, when earlier someone asked about what's that VA home loan process looks like. Cosigners, what you can qualify up to on a monthly basis. What does that mean when it comes to a purchasing price is all going to depend on your specific financial situation. Disability income can be used, and also your full-time job could be used, but it's also very circumstantial, which I'll give you guys some examples of what that looks like in a little bit. What do you need to determine your eligibility? So being eligible and being qualified are two very different things. Somebody earlier asked, do all veterans qualify? Well, as long as you got an honorable discharge from the service, everybody that has that is eligible for the VA home loan, but doesn't mean that they qualify for the loan program. What we use to determine your eligibility is your certificate of eligibility. You can get that from the ebenefits.va.gov. You can always reach out to me. I'm happy to pull that for you. If you're still on active duty, you still need to get a statement of service from your commander stating that you've been in the service, how long, your socials on there, so the VA can verify it. If you're in the Guard or Reserve, and just one side note, if you're active duty and you got off of active duty, you'd have required 24 months of service in order to be eligible for the VA home loan once you're out. But if you're in the service, currently active duty only, you can use the VA home loan within 90 days of being in service. If you're in the Guard or Reserve, separate, right? Not being 2 years active duty or 3 years active duty, then going into the Guard because you would already qualify. You have to be 6 years in the National Guard or Reserve in order to use your VA home loan benefits. This is what it looks like. I have two examples. One, a non-exempt Marine. Entitlement code is going to be anyone who served from the Gulf War to current, branch of service, and are you exempt from the funding fee or not? In the middle, if you bought and sold a home, you definitely should be checking this because sometimes your old VA loans might be on here and your entitlement might be locked in to an old property when it shouldn't. So it's just like checking your promotion points. You need to double check this. If the veteran's basic entitlement is $36,000, you have your full entitlement. Again, this is not a math class, so I'm not going to go through like all the math that goes behind it. But if you have the $36,000, you have your full entitlement. Again, in this case, at the bottom, you'll see veteran is not exempt from the funding fee. In the next one, you'll see that this is entitlement code 9. So prior to Gulf War, Navy exempt. And then at the bottom, it shows $29.60 as a monthly compensation, which also helps us verify that income. And this looks to be that it is 100% disabled veteran, that veteran status would be. So no funding fee, and then also qualifying for property tax waiver on your primary residence. Now, when it comes to looking at the financial snapshot, so this is your situations. So I'm going to just kind of go through a couple of them. W-2 employment and self-employment. The VA is looking that you have 2 years of W-2 employment. Now, if you were self-employed for a year and then went to work for a company for a year, you can do that. We can still use that income. If you're on deployment for a year or 2 years or just got off active duty and buying another property, you can, or getting a job and then trying to buy a home, you can do that. If you're self-employed, they want to see a minimum of 2 years of income. But just like a lot of self-employed people that I know, they don't like paying taxes, so they write off a lot, so they're not able to qualify for much. I touched on this for a hot second. Transitioning from the military to civilian is relatively easy as long as it's within your field. Transitioning from school to civilian work, that is also very easy. So if you've been in school for the last 4 years and get a job offer, let's say starting at $60,000 a year, you could start your job and then 30 days later, you can close on the home as long as you have a certificate. This also goes with programs like, let's say you weren't employed, but you got a job at a ComEd or something, or People's Gas, and you went through an internship program, you got certified, and then you started working. You can use that as well. One thing people don't realize is that if you are in school, you have a spouse. If you collect disability, your income counts. Your school benefits do not count. So like your BAH while going to school does not count as income. A lot of people think it does. It does not. So if you have a spouse, even if you're not working, but you're going to school full time, and your spouse is working full time, you're still able to use your VA home loan to buy a home. And another unique situation is if you're just collecting disability, because some people collect disability and pension, even if they're in their 20s or 30s, they are still able to use just that income to qualify to buy a home. And I know earlier I mentioned about the taxes. The only time you're able to buy a property in Illinois and pretty much immediately get your exemption, there's 2 examples. If one, you buy a property from a veteran that has the exemption, then you don't have to set up taxes and insurance. The other is if you buy a new construction property where the taxes have not been assessed on the property and you're at 70% or more in disability, you're also able to pretty much waive your taxes on a new purchase. So one question that came up about cosigners. So the VA home loan cannot have a cosigner unless it is a spouse. So a veteran and a spouse. A veteran and a veteran. And hold on, I shouldn't have said you can't have a cosigner. You can't have a cosigner, but I'll explain it. So again, veteran and spouse, no issues. Veteran and veteran splitting their benefits, you can do that. A veteran and a non-spouse would require a 12.5% down payment. And then you guys are going to be like, where's this 12.5% coming from? Again, this would be a full math class to kind of go through what all these requirements look like. But just so you guys know, again, veteran, spouse, no issues, no, they don't have to do anything special, nothing. Veteran and veteran, they split their benefits and they could buy a property. But they're not like doubling the amount they can qualify for, just whatever they qualify for. And then it's going to be the veteran and non-veteran, which would require a 12.5% down payment. So we have a question. If you buy a multi-unit, does the income come from rent towards income requirement? So the only time you can use rental income to offset a mortgage payment on a VA home loan is if you have 2 years of managing a property under your belt, then you would be able to. Otherwise, you would not be able to use that income. Disability, Social Security, retirement, that you can use all that income. Assets, you typically want to have some reserves, but the VA doesn't require them. And if you buy a multi-unit and you end up using income to qualify, you must have 6 months reserves. Down payment, if one is needed, it can always come in the form of a gift, like from your parents. Or if you need to cover closing costs, you're also able to get that money from parents, or you could borrow against a 401k or an old TSP account for closing costs. Credit score. So I touched on it a little bit. Lenders are now requiring a little bit higher credit scores and things a little bit more stringent just because of the whole COVID situation. And what's unique about the VA home loan is that childcare expenses do count against your debt to income. So an example of that is if you spend $1,000 a month for childcare expenses and you write that off on your taxes, that would count like a car payment of $1,000 because it counts as against you. We have a question about closing costs, ballpark. I'm going to go through that because there's a couple things I need to explain within the closing costs. If you're out of the service, really just this is a slide that we throw in because I do a lot of stuff with the USO nationally. So they have a lot of folks that are retiring. So this is just something that you just want to take a look at if you are retiring and trying to buy a home. You know, looking at lower income, are you going to have a disability rating? What your retirement looks like? Rule of thumb is typically you could borrow up to half of what you gross after, and then you deduct expenses out of that in order to qualify. And if you're currently in the service and you're an officer or enlisted, it does make a difference because ETS is going to be on enlisted, and officers do not have an ETS date. So typically, if they're getting out of the service within the next couple of months, enlisted will have a very hard time to buy a property, whereas the officers will have an easy time just because, again, there is no ETS date. Now, one update to enlisted folks, if you've served for more than 12 years in the service and you re-up on your last re-up at the 12-year or on mark, you will also not have an ETS. So they're doing something right. Just to have a couple, so we had a couple questions. Just to clarify, if a veteran and a non-spouse decide to co-sign, then a 12.5% down payment is required. That is correct. So again, if you're a veteran and a non-spouse, non-veteran, 12.5% down payment. So a question that came up was, how do student loans, and this is actually a great question. So how do student loans, personal loans, etc., impact your credit? I think that's the first time someone's asked that. That is an excellent question because this always comes up in real life. Student loans that are deferred 1 year. Basically, like let's say if we closed today and then the deferment started, like it was deferred past, like it was deferred to June, but you were closing in May, like June 2021. Then that student loan would have no impact on you. And that's only unique to the VA home loan because all the other loan products, you can have all the deferments you want. They'll still count that payment against you and it will hurt you to qualify. So if that loan is in deferment at least 1 year prior to closing, you're able to do it. Denise, and then you had a question. If you could just type it into the chat box, I'll be able to answer that question for you. Any type of personal loans, they not necessarily affect your credit in a negative factor, but they will count towards your debt to income ratio. So just keep that in mind. This is the waiting period required for bankruptcies, foreclosures, and short sales. So if you look at conventional loans, it's 4 years for Chapter 7, VA's 2 years, and FHA's 2 years. Chapter 13 is a little bit less. It's 1 year, 2 years. Chapter 13 is like when you go into a debt consolidation program and then you end up paying your bills over time. If you have a foreclosure on your property, conventional looks at 7, 2, and 3 for FHA. Now, one thing to know, if you had a conventional loan or an FHA loan and you foreclose on that property, it has no bearing on your VA loan at all. But if you had a VA home loan and that property was in foreclosure or a short sale, you lose that entire entitlement of your VA home loan. So just keep that in mind. If you foreclose on a VA home loan, you've locked your entitlement out. Now, what you can do is you can pay the VA back for that entitlement, and you'll be able to then use your VA home loan again. Property types have their restrictions. Single family homes, the cracked sidewalks, they've gone away with that. For the most part, I haven't seen that come up in a while now. But peeling paint is definitely a factor when buying a home. That is something that will come up. If you guys are buying a condominium, a condo, it does require a separate VA condo approval. Now, living in the city, a lot of people buy condos. The frustration, because I hear this literally, I get a minimum of one phone call a day from folks saying, I'm looking to buy a condo. No condos are VA approved. And to your point, it is very hard to find a condo that is VA approved. The good news is we do those for free. There's no cost to do them. As long as we help you out with the financing, we do all that stuff for free. You could do it within contract time. Typically, it's like 35 days, 30 to 35 days, and you're able to get the condos VA approved and be able to get that through. So if you ever run into that or know other people, please, you can share my contact info. They could also check this link, which you guys will get a copy of all this so you guys can see which condos are VA approved or not. And if you are in a condo and you had a conventional loan, because you couldn't get the building VA approved, I could also help you out with that. That's pretty easy. And you can always refinance into a VA loan. We had a question here. Someone just asked if they moved in state, but they don't have any job gaps. That is perfectly fine. So Alex, to your question, you could 100% be able to buy something off the bat. We have a lot of people that transition to this area. Like I just had a closing for a person that just moved here from Boston. They're just working remote and they're able to buy the home. So you could definitely do that. So this kind of relates to an earlier question, 2 to 4 units, using rental income to offset mortgage payment. You need property management experience or have a real estate license for 2 years and state that you've had property management experience. Typically, you need 2 to 6 months of reserves. What that means is if your mortgage payment's $3,000 a month on your property, you're going to have to hold between $6,000 to $36,000 in a reserve account. Now, that doesn't have to be liquid or separate. It could be a 401k, money market account. It could be any of that. All properties require a termite inspection. Veterans don't pay for that. Doesn't apply throughout the entire country. Well and septic inspections in rural areas are definitely required. Veteran does pay for that. They can get pretty expensive, but just make sure you're just coordinating with your agent to get that. Appraisals are required for the VA. So appraisals, let me go over the next one. So there's a big difference between a home inspection and an appraisal. A home inspection is a licensed contractor or licensed inspector that's licensed by the state to come in and basically tell you everything that's wrong with your property. Don't get discouraged. Even new construction have issues. So they spend like 3-4 hours. They go through everything, making sure all the outlets work, bathrooms, plumbing, everything. An appraiser goes out to the property to determine if it's safe, sound, and sanitary and what the appraised value of the property is. So if you're buying a $300,000 home, because I just had this happen to a cousin of mine. We're just helping her buy. She's like, I feel like I'm overpaying. Well, the appraisal is going to determine if you're overpaying or not. So if you're buying a property for $300,000 and the appraisal comes in at $290,000, well, then you know that you're paying too much for the home. And then you have the option of negotiating with the sellers to go down on their price. And if they don't, you can walk away from the property and get your earnest money back. Home inspection just tells you what's going on with the property. So another question that came up from something we talked about a little bit earlier was buying an income property. How long do you have to live in order to do so? Again, you are buying the property to intend to live in the property within 60 days. If a life circumstance happens and you end up moving out, then you can do so. So an example of something like this is I helped a police officer buy a property 2 years ago. He bought a multi-unit, moved in, and was like, wait a second, I'm not living in this area. I don't want to live in this building anymore. So he was able to rent it out within a month of occupying that property. So kind of keep that in mind. So a question that came up is, are closing purchase times relatively the same for VA loans compared to other loan products? Let me rephrase that. To go under contract and close on a house, typically what the time frame looks like. For example, for us, it's about 22 to 25 days to close. If you use a lot of like the big veteran banks, which I'm going to talk about in a little bit, it'll be about 45 to 60-day close times. So it just really depends on who you're working with. But if you're asking me personally, it's about, like I said, 22 to 24, 25 days to get from contract to close. This gives you just an estimate of what affordability looks like, right? So when we talk about working backwards, this is what I mean. You focus on the monthly payment, and then on the right, you look at what affordability gives you, given the parameters of taxes and insurance. So if you feel comfortable making a $1,500 payment, you'd be looking around a $240 purchase price. If you're at $1,750, you go up a substantial amount. So $250 gives you pretty substantial leverage. So when I do my finance classes or budgeting classes, we talk about cars a lot, because people will buy $700 car payments when $700 a month gives you about $100,000 in purchasing power. People don't realize that, and then it's hard to go backwards on that. So again, $250 a month gives you a substantial amount of buying power. One question from somebody is, again, if you have a VA home loan, if you can't have multiple VA home loans at the same time. Now, closing costs. So this is going to be kind of like the, how do I say this delicately? Like your biggest advertised banks out there that cater to the military community. Normally, that's where you get your highest closing costs out of any lending institution. So you're going to have the 1% origination fee, which is pretty much charged on these VA home loans. We don't do it. We don't do that, but a lot of big banks do them. So just to give you an example, especially if you've bought before, you can look at your origination fees. You'll see if you buy a $500,000 home, there's a $5,000 charge for that. You'll also see a lot of discount points on loans. Again, they represent 1%. So I get asked a lot from folks is, what are your closing costs when you're buying a property? And that's a very vague answer, because people want to see like their closing cost numbers. And I'll tell you something, that it doesn't make a difference what the closing costs are on a VA home loan. There's only one section you need to look at, because the rest of the fees are all third-party fees. So it doesn't make a difference if you use 3 different quotes. They could be $10,000 off on each one, and it wouldn't make a difference at all. You only are concerned when looking at closing costs is section A. It's called the percent of loan amount of points, right? So that's discount points and origination fees. Plenty of banks, including myself, don't do 1% origination fees or discount points. Like those rates you saw up top, if you went to, I just looked at them earlier today. If you go to some of these banks, they're charging you 2 points to get a 3.625 interest rate. It's crazy to me. But again, a lot of times, if you're banking with some of these institutions, you kind of get suckered into it a little bit. But anyways, just double check that, just make sure. Closing costs continued. So typically closing costs, someone was asking, what's a ballpark closing cost? In Illinois, so 2 to 3% nationally. And if you use if you use a lot of these bigger VA banks, you're talking 4 to 5%. Again, just because you're getting hit with all those fees. In Illinois, you should be looking about 2 to 2.5%. Is pretty safe bet on the VA home loan. Closing costs can be paid in multiple formats. Sellers can pay for all your closing costs. Now, with everything that's happening right now, I'll kind of give you my 2 cents working with military folks around here. So we've pre-approved a lot of people earlier this year because people were in the hopes of buying homes. But right now, actually as of last month, you would have seen a substantial amount of people trying to buy homes. It'd be ultra competitive. It's a nightmare during the summertime, just because everybody and their mother, literally, because they're probably living with them, is wanting to buy a place. So right now, what's happened is that the properties aren't moving as fast, but they're starting to come online real fast right now because people are starting to wake up and go, okay, it's actually time to buy. This may not be as severe as we thought. Let's buy. So we're seeing a lot more activity. But with that, we're also seeing a lot of veterans, one, getting contracts accepted with the VA home loan. Two, we're seeing seller concessions for closing costs. So they're covering a portion of it. So you don't have to come up with the entire bill. You also get concessions. You can use that to pay off personal debt to qualify. People don't know that as well. But I haven't really seen that in this market. It's typically where areas are heavily veteran focused, like Virginia Beach, places in Texas, where they give them extra closing cost credits to pay off like a $2,000 car note that would help the veteran qualify for the property. The big changes for 2020, actually very substantial. Is there no limit on buying a home as long as you have your full entitlement? So if you, again, qualify for $1 million 4-unit building, you could buy $1 million home with no down payment, $2 million, $3 million. We see it all the time, especially in the DC area. If you have a VA home loan and you want to free up your entitlement, I touched on this earlier, you could switch between loans. So if you have a VA loan right now and you're planning to buy in the next 8 months to a year, you need to refinance your home right now into a conventional loan. Otherwise, if you wait to the last minute, you're going to have to do an investment loan. Interest rates are going to be 2% higher than what you're paying, and you need a ton of equity in the property. So you have to think about all this stuff well in advance. It helps to think this through at least a year in advance. Have someone look at your credit, look at all your income, look at your assets, and set you up for success. Because within a year, you could almost overcome any credit problems or issues, and just get yourself in a good financial space. Another big change is if you receive the Purple Heart while you're on active duty, no funding fee. But the downside is the funding fee did increase. So the first time you use the VA home loan, again, unless you have a disability rating, it's going to be 2.4% across the board. And if you use the VA home loan again with no down payment, it's 3.6%. Things to consider when buying a home, right? There's a lot of factors that go into it. How long you plan on staying at your current home? Because sometimes if you buy it today and next year you're moving, you might not be able to have enough equity to sell the property with all the fees that go with it. Really understanding your long-term financial goals. A lot of people create a lot of wealth with real estate, but again, it requires just thinking through that. There's more to owning a home. Like you can't call a landlord anymore to make repairs. You have to pay for all that yourself. Now, I am a huge fan of the home warranties. These warranties are when you buy a property, or even if you have a current property, you can get a home warranty. So it's not like your insurance for your homeowner's insurance. It's a warranty on the house that covers all your mechanicals, like your AC, water heater, washer, dryer, stovetop, oven. All of this is covered. It's about $500 a year, and you can keep renewing it year after year. They are lifesavers, especially if you have multi-unit. That's also covered. There's also regular maintenance costs. People are like, oh, the roof needs to get replaced. Well, that is normal, right? That is just a maintenance cost to holding the property. And what if you have to rent the property out because you need to, if you're active duty PCS, too, if you're switching jobs or moving for your job, it might not always make sense to sell because, again, you might have just bought it and can you rent it out? But this is where working with a good real estate agent is going to give you, hey, if you buy this home, this is what you can get in rent for it, and see if it makes sense. And do you have money in the bank in case something does go wrong, where you have to spend a couple $1,000s to get something fixed because you didn't get the home warranty? Home warranties, I think normally it's like $100 deductible when they fix it. And are you properly budgeting your expenses? And I'm sure there's a lot of other factors you guys could think of. So question, what's the $500 property protection warranty called? It's called a home warranty. So like Home Warranties of America, there's a couple of them out there that offer that type of service. Let me just quickly, look it up. and I'll give you guys a couple examples of different places. So there's Home Warranty of America is a good one. Let's just look up some of these additional warranties. There's like Total Home, Choice Home Warranty. So if you guys just Google them, you can see what their reviews look like. But again, the folks that we've worked with live by these things just because a water heater goes out, that's a couple grand. AC, HVAC goes out, that's $5,000. We're just throwing numbers out there, but these things are expensive. So I touched about a little bit what's going on today with the whole COVID situation, the pandemic. Lenders have tightened up their guidelines, but there's also a lot of opportunity with what's happening for you to actually be able to go under contract again. Right now, typically, it would be impossible to go under contract. Properties would be going over list price, and so it's an opportunity. But again, you have to figure out if it's good for you. Is your job in a good position? Just because of a lot of the layoffs that have been happening. So you just want to consider that. This just gives you a chart, renting versus buying. Again, this isn't designed for me to tell you go buy a house. This is just me to give you education. And if you guys have questions, you can reach out to me. I'm happy to help. I do these things. I do this. But this is just like a quick comparison. People have been renting for the last 5 years, paying $1,400 a month. You've given somebody else $84,000. Now you still have to pay. They're paying interest. They have some type of mortgage, but they bought that home and they're renting it out to you, no matter what it is. Again, there's always pros and cons to all of this. Homes, like we talked about earlier, do require maintenance. You're not just calling a landlord to take care of it. You're doing that yourself. But you're also able to do what you want with the property. You're able to write off the interest. Some people have dogs and they have too many of them, or they have animals, and landlords don't allow them to rent from them. So they have a hard time. So sometimes buying a home, it makes sense. So I'll leave it up for questions. And before we go into that, if you guys want to, if you're a veteran and want a free real estate license, I'm going to include the link for that in the webinar. You can get one. You can just apply for this sponsorship. But I'll leave it up right now for a couple minutes. If you guys have any questions for me, again, you guys will be able to contact me offline if you guys are interested in buying a property. If you're looking to connect with realtors, I work with some amazing realtors that will be able to guide you through this process. I think a lot of times this business gets a bad rep for like used car salesmen, and it shouldn't be like that. But that's why working with good folks is going to get you good results, because you always want to make sure that you have your interests and you're getting yourself in the right financial position. Not just buying a home because you want to buy one, right? Just having the right experts on your side advocating, does it make sense to buy this property? Does it not? Because it might have some home inspection issues that just would be hard to overcome. So one person talked about, I could talk about the cash out refinance. So you're able to do a cash out refinance on your property. So this would be on the VA home loan that you currently live in. Now you're able to go up to 100% of the value of the property. Now, after you go over 90% loan to value, so what that means, quick numbers, if your property value is 90,000, or if your balance is 90,000 and the value is 100,000, that's 90% loan to values. So that was just some quick math on that. So you're able to go up to 100% of the value of your property and take cash out of your property. But anything over 90%, the rates really do go up pretty high. But the good news is, even if you did it, you just wait about 7 months and do an interest rate reduction refinance loan and just lower your payment down. You'll lower it pretty substantial. Next question is about the tax exemption. So property taxes are paid in arrears. So in 2020, you will be paying 2019 taxes. So if you take ownership of the property today, we're still in 2019 taxes. So next year, when you took ownership of the property, you're going to be actually, that's when you're going to get exempt next year. And in Cook County, it'd be the second installment of taxes. And then, yes, you would get an 8-month reimbursement in September of 2021. A couple other, so the real estate license is free, right? So again, I'll have this link for you. So 2 things. We're going to send you a copy of the PowerPoint. We're going to send you the video link to this. I'll also send you a link to the interest rate reduction refinance loan that presentation that I did. It's also the same thing. It's very educational, so you guys can do it. So you guys don't have to download the slides. You just get a copy of all that stuff from us. And that's really it. Hold on, we have a couple more coming in. So for the interest rate reduction refinance loan, that's a great question. To really get the best rates, you really have to be in that 640 or higher. And one thing to touch on the interest rate reduction refinance loan, no income is verified. You just need a source of income. So it's a big factor because people are like, oh, I only collect disability, but I've been unemployed. You're still able to do the refinance with the VA home loan on the interest rate reduction refinance loan. But again, we'll throw that link in there. I think it's only 20 minutes. I kept it short for you guys. But you guys have been amazing. Again, please connect with me offline if you guys have any questions. You guys stay safe out there. Stay out of trouble. But it's really easy to do right now because there's not much to do. We have a couple questions. Yes, I am in the north side. That's a good one. So thanks again, guys. Enjoy the rest of your day, and I will talk to you guys later.